Okay, welcome back. So before we dive into today's topic, I just wanted to mention in the previous video the accounting equation, which we have been talking about assets equal liabilities plus owner's equity. So in this topic today, we're gonna discuss that how we can analyze accounting transactions, or you can also say business transaction, by implementing the accounting equation. So let's make accounting easy again. Okay, so first off, if we want to analyze the accounting transactions, at least I think you have to be transparent about the accounting transaction definition, don't you? So, the accounting transactions are the organization's economic events that are recorded by accountant. And of course, I was talking about the economic events in the first video, what the hell is accounting, and the second video, ethics, principle, and assumption in accounting. Therefore, check it out, okay? However, the most vital notice of economic events is that they must be measurable in the monetary terms, and that is all you need to remember. Furthermore, there are basically two kinds of accounting transactions, which are external transaction and internal transaction. And now we're gonna jump into the external transaction in the next slide, okay? Okay, so this is the external transaction, and the concept of external transaction is the economic events of a company with some external companies. For instance, buying materials from suppliers for production, paying rent for the landlord, and selling goods to customer. And that is all. Next, it will be about the internal transactions. So the internal transactions are economic events of a company without the other external companies are involved. For instance, you are an owner of the IHA company selling food, and you decided to buy a delivery car for 1,000 cash to serve the customer purpose, right? And of course, the company's accountants gonna record that car under the company's assets at 1,000. So just assume that each year the value and price of the car will decrease a small amount, around 100, by the age, by daily users, by the old-fashioned model, etc., etc. Therefore, after 5 years, the IHA company will record the car's price for 500 cars in the financial statement. It means that each year, the car is of 100 in fair value of the car. By the way, you can call this technique under the name depreciation of assets, and I will share it with you guys in another video. So, back to our example. This recording is stated being internal transaction, isn't it? And the question is why? Because the delivery car is used by company's employees to generate revenues, and the employees are working for the company, right? Hence, this transaction is supposed to be internal, which means that happened inside the IHA company without the other external companies are involved. Incidentally, there are other examples such as paying wage to employees and transfer inventory that is quite interior. So explain it for yourself, okay? Same logical thinking with the first example, alright? Next, we're gonna do some practice that require you implementing the accounting equation and the accounting transactions. First up, we're gonna see in the slide, there is some news angel. That's right. 4 subcategories of assets are cash, accounts receivable, supplies, and equipment. So we're gonna run over it before doing transaction analysis, okay? Firstly, the cash category. Of course, the cash category will record the cash and circle get the square, won't you? The company's cash from sales of goods, cash from investor, cash from paying expense. Secondly, it is the account receivable category. So the account receivable category store the money from credit sales of the company, which means that the company's revenue have not been collected yet from their clients, likewise allowing their client to pay for the good later on. Thirdly, it is the supply category, or you can call it is the inventory category. So the supply category store the money of significant current assets that are expected to be converted to cash within a year. It can be finished goods and raw materials that have been accumulated by the company. Finally, you could notice here, which is the equipment category. So the equipment category store the money of the non-current assets that it is considered long-term, where their full value won't be recognized until at least a year. This can be machinery, land, and office equipment, and that is all. Now, looking into the right side of the accounting equation, the subcategories of liability is accounts payable. So the accounts payable category store the money from credit purchases of the company, which means that the company purchases goods and services on credits. It is expected that the company will pay that debt up within a year. Now we are officially done with the explanation of the new things. Next, we're gonna crack on with analyzing the first transaction in the table. Now we're gonna begin with the first transaction. Harry started to open a restaurant that is named the IHA restaurant in January 2020. Harry invested 10,000 cash in the IHA restaurant. Alright, firstly, we get 10,000 cash from restaurant owner. That means amounts of investment increases the cash on the left side of the accounting equation by 10,000. Why? Just because when a restaurant receives an investment of 10,000, that means that restaurant owns 10,000 cash, right? Next, the right side of the accounting equation. Now we keep looking over four subcategories of owner's equity. Which one is proper to store the owner's investment? And the answer is the owner's capital, which is quite obvious. The owner's investment increases the owner's capital by 10,000. So let's see the equation. It was balanced, right? The left side equal the right side equal 10,000. Accordingly, it is also fitting the regulation of the accounting equation, which is everything a business owns must be equal to everything a business owes. Sorry about my explanation, which was too monotonous, but this is the first transaction, so we should know the step of the transaction analysis, okay? The second transaction is in February 2020, the IHA restaurant purchased tables and chairs for 100 cash. Firstly, we get that 100 was spent for table and chair, therefore the cash decreases by 100. The table and chairs are increasing the equipment by 100. So at the right side of the equation, there is nothing to change on this side because the economic event did not relate to the restaurant debt or changing its owner's equity. So afterward, we still get the balance between the left and right side, which is 10,000. And we are still on the right track, aren't we? The third transaction is in March 2020. The IHA restaurant purchased raw material for cooking on credits at 200 from the ABC store. So we can get the restaurant purchasing of supplies on credits by 200. Firstly, the supply increases by 200 because the restaurant purchased raw material. Secondly, the accounts payable also increases by 200 because of the restaurant purchasing on credits. It means the restaurant debts is 200 and they are liable to pay up later. Finally, we still get the balancing on both sides, that is 10,200. The fourth transaction is in April 2020. The total sales of the IHA restaurant was 500 cash. Okay, so we got that the restaurant received 500 cash from the sales of goods. Therefore, the cash and revenues are adding up by 500 and 500 respectively. As a result, we get the balancing on both sides, that is 10,700. The fifth transaction is in May 2020. The IHA restaurant was tending to increase the revenues, therefore they hired the local advertisement company to advertise a restaurant. However, the IHA restaurant postponed paying the advertising bill at 1,000 until the end of 2020. So basically, we get that the restaurant purchased advertising on credits by 1,000. Therefore, the accounts payable and expense increase by 1,000 and 1,000 separately, Okay, now when I'm talking to here, you guys gonna question like, why is the equation still balanced when just increasing into two categories on the right side? And the answer is that the relation between the owner's equity and expense is contrary. It means the more increases in expense, the more decreases in owner's equity. Because of this, we still get the balancing on both sides, that is 10,700. Okay. The sixth transaction is in June 2020. The IHA restaurant was hired to organize a feast that valued 3,000 for the OAB restaurant. However, the OAB restaurant just could pay 2,000 cash and promised to pay 1,000 to IHA restaurant in the future. Okay, so this one is quite complex, so stay focused. And now we get that the restaurant received 3,000 in the revenue, so that the revenues increases by 3,000. However, there are 2,000 cash and 1,000 on credit amongst its revenues. So it is broken down into two small amounts, 2,000 and 1,000 are added up into the cash and the accounts receivable separately. Finally, checking the balance, we still get the balancing on both sides, that is 13,700. The seventh transaction is in July 2020. The IHA restaurant has been paying for the rental fee at 900, wage 2,000 for employee, and utility bills 300 in cash. So like usual, the restaurant had to pay totally 3,200 for expense, including the rental fee, wage for employee, and utility bills. Consequently, the expense increases by 3,200 and the cash decreases 3,200. However, as I have been mentioning earlier, that the expense and the owner's equity like cat and dog, so finally we still get the balancing on both sides, that is 10,500. The eighth transaction is in August 2020. The IHA restaurant paid off the advertising debt from the local advertisement company at 1,000 cash. So this one is exceptional because it's linking to transaction 5. That's the restaurant purchased an advertisement on credits by 1,000. So at this transaction, the restaurant paid off that debt by 1,000 cash. Because of this, the cash and the accounts payable slump by 1,000 and 1,000 separately. Finally, two sides of the equation are balancing at 9,500. The ninth transaction is in September 2020. The IHA restaurant received 1,000 cash from the OAB company that have been billed for the feast. Okay, another transaction related to the last transaction. Therefore, the proceeding step is unchangeable. So, since transaction 6, we get that the restaurants performed services on credits as 1,000. So the restaurant is going to receive that receivable revenue. Thus, the cash increases and the accounts receivable decreases by 1,000 and 1,000 particularly. Consequently, the equation is still balanced at 9,500. Final transaction is in October 2020. The IHA restaurant owner Harry withdrew 5,000 cash for personal uses. So we get that Harry withdrew 5,000 cash. That is going to decrease the cash and increase the owner's drawing by 5,000 and 5,000 individually. Accordingly, the balance is still maintained on both sides at 4,500. So this is the whole 10 transactions that we have been finishing. Okay, so this is a small and easy problem. I believe you guys can handle it for yourself, okay? Just having 5 accounting transactions. Moreover, you guys should try it out first and then compare your work with my answer, okay? This is the key for the first transaction. This is the key for the second transaction. This is the key for the third transaction. This is the key for the fourth transaction. This is the key for the final transaction. Okay, so to sum everything up that we have been discussing, firstly, the definition of accounting transaction as well as 2 basic kind of transaction, that is external and internal. Secondly, disclosing about 4 subcategory of assets. It is cash, accounts receivable, supply, and equipment. Finally, asset always equals liability plus owner's equity. If it is not, it means you fucked up, okay? So this is all for this video, and the next video will be about financial statement in accounting. So thumb if you like it and sub if you love it, and see you in the next video. Peace.